Good morning, everybody. Hey, welcome to the last day of July of 2025. Hard to believe we will be at August 1st tomorrow. This year's flying by. Glad you're with us today as we look at the markets. What's happening today will be like Facebook, Microsoft, a lot of big companies reporting. We'll talk about that and more in just a few moments. Stick with us as Dave joins us up next.
Crowded house there, 105.7 Light FM. Appreciate you being here every morning with me. It's Morning Dave. We're at 8:41 now, 19 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. You do that. We'll give you what advice we can, though, for the masses every morning at this time, with help from Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. I think Jay Powell lost his glow yesterday afternoon. What do you think?
Hey, I'm thinking that is the case as the markets did well right after the announcement, but he got to talking and we saw a dive in the indexes. Now they did bounce back, but not to positive territory across the board. The NASDAQ did get back positive, but the other two indexes ended up in slightly red territory.
Oh, yeah, to flesh it out for folks that weren't following it minute by minute, the Federal Reserve announced no change in interest rates yesterday, which nobody was surprised by. Two governors dissented, which was big news for all the gossip columnists, and really functionally nothing else. The vote was still 9-2. Everybody said, oh, okay, fine, and traded the Dow. I'm using that as my index because it's easier to read the numbers. Traded the Dow up slightly. Then Jerome Powell, the chairman of the Fed, took the stand and started answering questions. I didn't hear him say anything that would have surprised anybody or annoyed anybody. But while he talked, the Dow fell 400 points. As near as I could figure, the only thing I could figure out that he said that they didn't like was that he really didn't go out on a limb and didn't encourage speculation for a September rate cut, because I've noticed the CME number up in Chicago that they used to give us the odds of a cut are now going down for September, and that must be the only reason he didn't go out on a limb, right?
It must be. I mean, I'm thinking, we know the vote was 2-10. 2 wanted to reduce interest rates. 10 said hold the line. And that's a pretty wide margin.
Yeah.
So I would think if that margin was closer, maybe there would be more speculation that yes, interest rates will be lower in September. But we've got a lot of time, right? They don't meet in August, so we'll have until September for some more numbers to come out, for them to have some more data to glean and go through to determine what they think the next step is. And if this market keeps rearing like it is, Dave, why raise interest rates, right? Or why lower interest rates, right? Because everything seems to be hunky dory the way it's going right now.
Yeah, it's messing up the housing market, but beyond that, it doesn't seem to be messing the economy up at all. Trump, on the other hand, does have a very valid point that as long as the interest rates stay in quote-unquote restrictive mode, it is messing up interest payments for the federal government. And his point's well taken. It's screwing up the housing market. What Powell was saying is that he expected that a tariff bump in inflation would happen, but that it would be temporary, a one-time tariff inflation bump. And his alma mater in private industry, Goldman Sachs, put out a chart this morning predicting that, they expect to see a tariff interest bump going up starting toward the end of this year, getting us up a little bit over 3% again, but then going away by the middle of next year because we'll end up getting used to it, I guess. But so maybe Powell has a concern that actually makes some sense, and we'll know by September what we'll end up seeing out of that. But right now, the indications are that while it isn't where we want it to be, so far our inflation rate is at least trending in the right direction. The PCE top line inflation, 2.7%, no uptick so far on that reported this morning. So So far, it sounds like both sides of this argument have a valid point, doesn't it?
It does at this point, and we'll just have to wait to see if the data gives the Fed enough ammunition to reduce interest rates.
Yeah, I'm sure that Powell would like to see the rates go down too. I mean, when he gets out of a job, he's going to probably want to buy a house as well. But it's just hey, right now the trends are slow, and there is some concern when we actually do have all of the tariffs in place and working. Yeah, it might bump a few prices up, and we might feel it a little bit. Goldman Sachs sees, a little bit above 3%, maximum about 3.3, 3.4%. Not enough to really scare the pants off of you, but enough to be able to make the Fed say, well, let's keep money a little tighter for a while. And indications are that right now it's about on schedule for that because nothing's going on yet. He did emphasize, by the way, one time, and then it slips back down. And what was that word we used back a couple of years ago? Transitory?
Yeah, transitory.
Yeah, we just love transitory inflation. The other things going on, jobless claims were still showing to be healthy. They were up a little bit, but only 218,000 first-time unemployment claims last week. So, like you say, there's really no indication right now, anyway, that the economy is in any serious trouble, although I do get a few of the stinkin' thinking crowd off of the GDP report from the other day. Bureau of Economic Advisors advanced estimate showed an annualized 3% increase in gross domestic product, but economists have been saying, well, we really need to look at growth in sales to private domestic purchasers. I've never even seen that reported. They're saying it still shows signs of weakness, and the GDP growth is an economic mirage. Just in case you don't have enough to worry about today, I feel like I need to throw that out.
Yeah, they're
So
always
there.
trying to find something. Trying to find
Absolutely.
something, talk about.
But let's talk about good news. Tech stocks are having a party. We had Microsoft and Meta report last night. How's my Windows PC people doing?
Dave, they really had a good quarter. They beat both on the top and bottom line pretty well, as a matter of fact. And so they are up 9% this morning, Dave. 9%.
Holy
Yep.
crud, they're one of the nation's largest industries anyway. I noticed from the report that they're especially happy with growth in Windows Azure, which those of us in small companies don't use much, but the cloud version of Windows that big companies use for sharing, I gather it's growing like a weed, huh?
Yeah, it was the revenue from that department went above $75 billion
Wow.
for fiscal 2025. So that was some really good news for them. And again, they continue to, I mean, their revenue number, Dave, was almost $3 billion more than expected. Not quite, but
Ah,
almost.
chump change. Just
Yeah.
$3 billion. If they were Walmart, the investors would be demanding $10 billion. How, how about Facebook? Are we buying enough junk off of Facebook to keep them happy?
So Facebook, they had a good quarter as well. They beat I say they knocked it out of the park. On revenue, they beat by about $2.5 billion, and then on earnings, they came in at like $7.14 a share. They were expected to make $5.92 a share, so a
Ooh.
pretty substantial difference there for Meta as they trade out on their earnings, but they're up almost 11.33% this morning.
Yeah, I noticed they were saying that their AI bot has been leading in terms of growth, in terms of revenue. I haven't figured out yet how they make any money off of that AI chat bot they've got, because all it does is every time I want to make a post, it says you want us to do it for you.
Yeah.
To which I've always said no. Somehow they're making money off of artificial intelligence even.
Yeah.
We got two other big ones coming in tonight, Apple and Amazon, right after the close. Any other indications you're seeing this morning out there in the markets?
Oh, we got a couple here, Dave. We've got CVS reported. Uh,
Mm-hmm.
they uh, they beat as well on earnings and revenue. They're trading up 6.75% this morning. Comcast They're up. I'm having a hard time figuring out why so much. I guess they beat on um, on earnings, which was good, but they lost like, where's my number here? They lost like 226,000 broadband customers.
Woo!
Yeah, to me that sounds like not good news, but they seem to be rallying this morning, up 6%.
Well, maybe those postpaid subscriptions I whine about the cell phone companies living and dying off of are starting to come to home to roost in another industry, huh?
Maybe it is. Hey, we got
Still,
Norwegian Cruise Lines. They reported big numbers for them. They came in as expected at 51 cents a share. Revenue missed by a little bit, but they reiterated their full year guidance, and they cited strong demand. The demand in the cruising, which happened yesterday for Royal Caribbean as well. They said high demand. Norwegian's up 13.3% this morning. I had to look a little hard though for a loser today, Dave. And
I was going to say, yesterday I was giving you grief because all you had were losers. Today, all you got is winners.
yeah, so today I don't have the exact numbers as far as earnings or revenue, but I know that InBev, which is the big beverage brewer, Budweiser and the likes of those, their sales volume declined by 1.9% year over year on the last 3 months, and that was way worse than the 0.3% that was expected. They're seeing a lot of slack demand in China and Brazil. It's really becoming weaker over there.
Hmm.
And so they are trading down. Where's my number here? They're trading down 10.6% this morning.
Youch! My lord,
Yeah.
people, we need to drink more beer.
And the last one I have for
Oh,
you is a
yeah.
household name, Ford.
Mm.
Ford coming in today. They uh, they beat on earnings, beat on revenue as well. They did reinstate their full year outlook as well, including they expect a $2 billion tariff hit on the expense side. So they're trading down a little bit this morning, about 2% before the
I saw
market gets going today.
I saw that headline about the tariff hit going across my ticker. I was wondering what that was going to do to them. Resetting the table, we were kind of a negative day yesterday on balance on Wall Street right after the Fed interest decision. Things calmed down a little. How are we doing 45 minutes early this morning?
They've got a lot of green ink. The Dow up a quarter of a point. The S&P 500 is up almost 1% and 0.96. And the NASDAQ 100 right now is up almost 1.4% heading into the open. So it looks like it could be a good opening to close out the year. Now the question is, can we close there today and print any new highs for the month? Now on the other side, we got silver retreating significantly from where it has been, Dave. It's down 2.75% this morning at $36.70 an ounce. Gold's
Wow.
up about a quarter of a percent. Crude oil's down a half a percent to $69.66 a barrel.
Yeah, what's that? Almost $2 more than it was yesterday, isn't it?
No, it's actually really close. Actually, yesterday morning it had crossed over. It was
Okay.
like $69.40, I think, yesterday.
Okay, it's a big notch up from just a few days ago, though, and I'm
Yeah.
still wondering why. I've got to figure it out. Looking across the pond, nobody's particularly happy over across the pond either. The Asian rim markets, mostly all were down. The Japanese market had a pretty good day, probably because we're settling up that little tiff we had over who's paying who on the trade deal with the Trump administration. European indexes are flat to off overall balance. The average European index is down about a third of a percent halfway through the European trading day. Getting my retirement together to actually know I can retire someday is a task that takes an expert. How do I take advantage of your expertise to make my retirement happen on time? You there, Philip?
Sorry, I
Am I?
coughed and I forgot to unmute myself. So they
Oh,
can give us a
okay.
call at 863 382-0037 to schedule their core retirement analysis. And folks, that's just a 30-minute phone call where you and I are going to talk to see if you're on the right track to the retirement you always dreamed of. It's that simple. We'll answer your questions and make sure you are doing well. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And we'll kick off August together and see how things are going tomorrow morning about the same time right here. Fair enough?
Fair enough, buddy. Have a great day.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who likes a...
Hey, folks. Thanks for joining us today. Have a good one. I'll talk to you again tomorrow. Bye now.